When you look at that sort of, not just the incredible bull market that Nvidia has been in, then the decline and this rapid turnaround, what is fueling this stock?
Yeah, I think what's fueling it is there is still a ton of spending on the AI chips that NVIDIA makes. So I think the downtick was concerns that spending might abate. Also, that they might have some issues with their next generation of chips. And I think the recovery has to do with a lot of recent data points suggesting that spending on AI just isn't slowing.
Can you point to a catalyst in particular?
Certainly, Foxconn last week, they came out and said that things are going really well, that the rest of their year looks great. And a lot of that is being driven by AI servers. They're NVIDIA's largest partner on its new Blackwell chips. Um, but beyond that, you go back a little bit, Supermicro, another big NVIDIA customer. They had a tough quarter because of gross margins, but their sales were great and their guidance was great.
What makes headlines in the stock market during turbulent times? Amid a historic $6.4 trillion equity wipeout, Nvidia's stock defied gravity with a 5% leap, bolstering the Nasdaq and delivering gains for the technology sector. Yes, you heard that right. While other tech giants saw red, Nvidia flashed green. This stock's resilience couldn't come at a more pivotal moment, with its second quarter earnings announcement looming on August 28th. Nvidia isn't just surviving the storm, it's thriving. The scenarios unfolding with leading names like Microsoft, Google, and Meta might give us a sneak peek into why this semiconductor juggernaut could be the one to watch. But that's not the whole story. Not even close. But before we go through it, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
You mentioned the Blackwell chip. There's been some concern about that being delayed. Does it matter to the overall growth narrative for Nvidia?
I think in the near term, it certainly doesn't. So if I look at last quarter and this quarter coming, I don't think Blackwell was ever going to be a large portion of revenue. Moving forward, certainly they have to execute and make sure that that any delay is minor versus major. And certainly you don't want to see it being a repeated problem, but they've executed so well. If they're on track from here, I don't think it matters.
When you're looking at the broader landscape for the chips, and I just happen to have been covering the 13Fs, I saw a lot of movement with other chip makers, not just Nvidia. I see that you have other, what you call green flags in some of the other companies in the space. Can you talk about what's ahead for the sector and which companies in particular you like?
Yeah, so I mean, certainly, I think that everyone is committed to spending on AI through the Blackwell launch. So you've got another year plus of, I think, elevated AI spend. I think that drags a lot of companies along with it. So it's not just Nvidia; it's TSM on the fab side. It's the memory makers. You need HBM, high bandwidth memory, to support these new chips. That helps out Micron. You need more storage. AI creates data. That helps out companies like Western Digital and Seagate. And so a lot of the boost right now is around the AI complex. Where I think you may get another pickup next year is if we do see AI proliferate in edge devices, that requires more content. And so that benefits a whole lot of the semiconductor world.
Imagine this. 7 of the most valuable U.S. tech companies collectively lose a mind-bending $1 trillion in market value. Nvidia's stock defied this tech stock massacre, marking a significant 5% jump. The company's second quarter earnings announcement is a pivotal factor, expected to show $28.54 billion in growth from a staggering 111% year-over-year increase. Among Nvidia's arsenal of tricks is the Blackwell platform, anticipated to be a major growth driver. It's set to revolutionize the industry with components like Grace Blackwell superchips and Tensor Core GPUs. Whether you're building AI-driven infrastructures or just aiming to keep up with the latest gaming graphics, Nvidia is leading the charge. And let's not overlook the company's expansionist tendencies, acquiring AI-focused firms like Brev and Shoreline. The rationale? To boost Nvidia's ecosystem in artificial intelligence and machine learning, fostering an environment ripe for innovation. In layman's terms, Nvidia isn't just resting on its GPU laurels. Nvidia is trading at a more reasonable valuation after its stock split decision. The 10-for-1 stock split is tailored to make shares accessible to a broader range of investors. This is no small potatoes. It's a calculated move that unlocked more investment potential and wide appeal. But that's not all of it, so let's keep rolling. Hello everyone and welcome back to Investocracy.
On that beloved stock, Tyler, I'm going to tell you to buy it cautiously if you don't own it. You've got to wade into that water. This is the hottest area of the market. As long as the race for AI and this battle to continue to create AI continues, this stock's going to do well. They're still looking for like 40% growth in earnings from this company over the next 5 years. It's gone from 48 times earnings, 2024 earnings, to 34 times next year and coming down with this large earnings growth. So it's performed beautifully well. It's a cyclical area. It probably has a few years left. But the AI impetus that's driving those earnings, I think, can take this stock higher, even at a $3 trillion market cap.
So if you want to establish a position, this is a dollar cost average in.
I think so. I mean, this is if you have a blank in this space, I would want to have a position. It doesn't have to be a full position, and it has to be in keeping with your investment discipline and philosophy. So it can't be an appropriate risk for your portfolio. Check with your advisor.
Let's look at some figures that'll make a finance geek's heart race. Nvidia witnessed a 262% year-over-year upswing in revenues for fiscal year 2025. Their data center segment alone raked in $22.6 billion, a whopping 427% increase. If this doesn't spell confidence, I don't know what does. Mizuho, a credible financial firm, even upped its price estimate for Nvidia's shares to $132, citing the upcoming results report as a pivotal factor. Throw in a 150% hike in their quarterly cash dividend, and Nvidia looks like the golden horse investors can bet on. Now, if the Blackwell platform wasn't enough to create a buzz, Nvidia's got another trick up its sleeve. The Omniverse platform for generative AI models and microservices. From digital twins to industrial automation, Nvidia aims to redefine content creation and simulation. Collaborations with heavyweights like Siemens further bolster their position. Think again. Nvidia is pushing the envelope with its RTX GPUs and AI-enabled laptops. The new GeForce RTX 40 Super Series GPUs and AI laptops promise to boost performance across the board, making life easier for developers, multimedia creators, and gamers. Trust me, my fellow gaming enthusiasts, it's Christmas all over again. So bearing in mind all of these givens, what might be coming up next for Nvidia stock? The answer is crystal clear. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Many people respond, and those who were supportive responded immediately saying it's not a demand issue anyway. So even if Blackwell is delayed, you sell more H100s and
at a very high margin. So
but you think the stock got hit on that?
Yes, I do, and it was kind of look. You've been around. You guys have been around. Sometimes there's stories that come out and they cause a ruckus. And they're very hard to check out because it's quiet period. Now, look, I have a great relationship with NVIDIA. I'm proud of that over multiple years. One of the things I'm proud of is that they won't tell me anything. They said, listen, we're in a quiet period. And then you say, well, guys, I just need to verify. No, we're in a quiet period. And after a while, you realize they're not budging because that's not who they are. So they were pitiful, helpless giant when that article came out. Not unlike the United States at one point under President Nixon. And I do feel that that's what got it.
Investing in Nvidia right now may seem like waiting for a bus in the middle of nowhere, hoping one shows up. But guess what? This bus isn't just on schedule. It's coming with first-class seats and free Wi-Fi. Oppenheimer analyst Rick Schaefer highlighted Nvidia's solid AI positioning, giving it a $150 price target despite a few minor delays. New Street's Pierre Ferragu upgraded the stock to buy, citing the benefits from higher spending on current chips. Meanwhile, Susquehanna's Mehdi Hosseini calmed fears about major delays, emphasizing stable yields for Blackwell chips. Mega-cap commitments. It's worth noting that the demand for Nvidia's precision-crafted chips is ballooning among mega-cap companies. Significant orders from Microsoft, Google, and Meta underline their trust in Nvidia's tech edge. Even with a hiccup like a 3-month delay, Nvidia's window of opportunity in AI is vast. Bernstein analyst Stacy Rasgon's insights sum it up well. Nvidia's competitive edge is too large for minor delays to impact market share significantly. Prospective investors might wonder if Nvidia's valuation is warranted given its immense growth profile. The short answer? Yes. With the triple-digit surge this year, skepticism is natural. However, a deeper dive reveals a stronghold in the AI processor market and a strategic positioning that's hard to overlook. As of recent trading, Nvidia stock closed at $109. Analysts across the board rated a strong buy, forecasting a potential upside nearing 32%. The anticipation surrounding the August 28th earnings report adds a layer of excitement. With revenue growth projected at 97.94% for 2024 and Nvidia's ongoing AI dominance, the future looks bright. Why now? Every stock has its moment, and for Nvidia, the time to act is now. The company's strategic moves, solid financial outlook, and innovative edge make it a compelling addition to any investment portfolio. Goldman Sachs expects Nvidia's Q2 results to surpass estimates, reinforcing the stock's growth trajectory. What do you think? Is Nvidia the linchpin of your portfolio's future? Amid the stock market's upheaval, Nvidia's resilience and visionary strides shine brightly. Whether you're an experienced investor or a cautious newcomer, Nvidia offers compelling incentives to bolster your financial journey. So, will you catch this upside moment? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.